Good afternoon. Good afternoon. It's Monday, the 20th of May, and welcome to another edition of Monday Market Picks. My name is Thilan Wickramasinghe. I'm the head of research at Maybank Securities in Singapore. And thank you so much for joining us today. The MSCI Asia Pacific Index has been up now for the 7th consecutive session, supported a lot by what China is doing. But also we've got the Middle East back in the radar with the Iranian president's helicopter going down, as well as Saudi King Salman's deteriorating health as well. So a lot to watch out for in the markets. Now, back in Asia, so what is China doing with a lot of these new measures that they have introduced? Is it really enough to sustain the markets? We've got Erica on the line to help us understand all this and make some sense out of this. When China sneezes, ASEAN catches a cold. So it's very, very timely that we've got Anand on the line, and he's going to be talking about his latest ASEAN strategy report. What are the top picks to watch out for? We also have a very quick update on FRENCKEN in Singapore after a very mixed result season for the Singapore tech scene. We also have Jia Lin. She's going to be highlighting an Opportunity Plus stock. These are some of our high conviction names. So do stay through till the end of the show. And as always, we have Nick, the chart guy's latest technical reports as well. If you haven't downloaded the latest newsletter, please do so. You can do that from the app as well as from the QR code on the screen right now. In terms of the key market movers, obviously China standing out last week. HSI in Hong Kong up about 0.9%, and the Shanghai Composite up about 1%, largely driven by the very strong measures that the Chinese government has introduced. The Dow Jones was up 0.3%, and the S&P up about 0.1%, as some of the inflation readings came in a little bit better than what was expected. We did see most of ASEAN also showing some strong results, with most of the markets in the green. The STI up about 0.3%. The SET getting some energy and up about 0.4%. And the Jakarta index up about 0.1%. Now, let's get into our key topic today, which is China. And we've got Erica on the line on that. Erica, welcome to the show.
Hi, Thilan. Thanks for having me.
Always great to have you on the show, Erica. Now, China's announced a raft of measures last week to bolster the property sector. You've actually called them Bazooka as building up in your report. Can you take us through what has been announced and what the implications are?
Well, Thilan, on Friday, various parts of Chinese authorities rolled out a package of support measures to stabilize both housing demand and housing supply. And these announcements represent the most concerted and coordinated efforts to prop up the property market since August last year. So in terms of demand side measures, the People's Bank of China abolished the minimum mortgage interest rate floor nationwide, allowing local governments to set their own mortgage rate. And then it also lowered the minimum down payment ratios for first homes from 20 to 15%, and for second homes from 30 to 25%. So that's to boost home buying demand. And then on the supply side, the PBOC announced that, to soak up the inventory of millions of unsold homes, it will be launching a re-lending program, providing 300 billion yuan of cheap loans that state-owned enterprises can borrow to buy unsold properties off the hands of presumably distressed developers. At the same time, on the same day, Vice Premier He Lifeng also announced a plan for local government to buy some unsold housing units from developers and turn them into affordable housing at quote unquote reasonable prices. So what are the implications? So number one, we think the government has been trying to engineer a soft landing for the housing bubble for the last 4 years. So this direction has not changed, Dylan. So it is still a soft landing. It is not taking off again, right? And the government is only rolling out this package to prevent a more chaotic downturn because April house prices have been shown to fall at the sharpest month-on-month rate since 2014, so 10 years ago. As to how effective these moves will be, well, the devil is in the details. So the entire scale of these unsold home buying program is not known yet. But the first salvo, which is the 300 billion yuan, is probably a drop in the ocean because unsold inventory nationwide stands around 30 trillion yuan. So this is around 1% of that. And we think that even to bring unsold housing inventory back to more manageable levels, they will need something like closer to 10 trillion yuan instead of just 300 billion. But Tilan, that's assuming that the government is buying homes at market prices. Now, if the government buys over the unsold homes at steeply discounted prices, that's going to have a serious market impact on the rest of the real estate sector. So we might see a step down in the paper value of housing wealth, which may not be appreciated by the families that are currently owning the homes. But I think it's a delicate balance how much the government can step in and at what prices. And then finally, at the macro level, by lowering the minimum down payment ratios for first and second homes, we think that the home buyers might be lured out of the woodwork would be those who couldn't afford the down payment previously. But there may not be many of them who are willing to become more indebted. And I think we're still waiting to see how big this bazooka is going to turn out to be. So watch this space.
Right. So a lot to watch out for and a lot of hard choices also for the Chinese government. Now, Erica, China's April data on industrial production as well as consumer spending also came out. What are they, and what are your key takeaways?
So for April macro data, we note that this is a story of fire and ice. So what's on fire? It is the manufacturing sector. We note that industrial output has grown by 6.7%. So it's above what the market has been expecting, which is around 5%. At the same time, household consumption has been slumping. So retail sales only grew by a meager 2.3%, so weaker than the week reading in March of 3.1%. And even the silver lining in manufacturing comes with an asterisk. So the manufacturing growth has been primarily led by high-tech clusters such as EVs, which rose 39%, chips up 32%, and industrial robots 26%. So the rest of the manufacturing sector still growing at low single digits, and property-related manufacturing such as cement and steel still in contraction. And then in terms of consumption, so we note that consumer discretionary categories such as apparel, cosmetics, and jewelry have entered contraction territory, and restaurant dining has also slowed down to just zero growth. So I think on the consumer front, looking a bit more worrying, Dylan.
Right. So still a bit more pressure on the consumer side, and while the industrial side is picking up. I like your reference to Game of Thrones there. Hopefully, the Chinese dragon will awaken sometime soon. Thanks, Erica, for joining us. I want to bring Anand in right now. Anand, you published a brand new report on ASEAN equity strategy. So before we get into the details of that, can you tell us what the focus of this report is and how often will this be out?
Yeah, hi, morning, Dylan. Thanks for having me back. I think for many of your viewers would be familiar with our bi-weekly ASEAN Plus fortnightly product, which goes through all the 6 ASEAN countries we cover and updates for strategy and stock picks. So that product has been going on for about 5 years. But this product is meant to fill a sort of a more shorter term role or a tactical role in terms of highlighting trading ideas on a 1 to 3 month view by each of the countries. So if you read the report, you'll see that every country has a couple of thematics outlined for the next 1 to 3 months, and the stocks you can play into those thematics. And finally, the report also has a quants view for each country because that also helps with the trading idea generation process. So we hope that this will be quite useful for, I guess, the more trader-oriented investors out there looking at ASEAN.
Great. I mean, I think that's a very, very big category for us in terms of our viewers here. So viewers, please do download Anand's report. You can get that from the newsletter today. So Anand, in this first edition, what are some of the key markets that investors should be overweight on? And also, what are some of the key stock picks that you're highlighting from these markets?
Sure. The 2 markets we are overweight on in this maiden report is actually Malaysia and Thailand. Traditionally, these are known as the more boring sort of middle income trap markets, but we do see a lot of potential for outperformance over the next 3 months. I think for Malaysia, which has already done well year to date, the index is up about 10%. We do see some momentum building up in the small mid-cap space in particular. And this is really around thematics like the Johor Bahru, Singapore, special economic zone, infrastructure in Penang, and also the tech upcycle where we do have quite a breadth of tech stocks in Malaysia. So I think, when we look at stocks, things like IT Max, SolarVest, SP Setia for the Johor Bahru thematic, Gamuda for Penang, and also tech stocks like FRENCKEN and Great Tech for the tech upcycle feature in this report. The other country we are overweight on is Thailand. Now, Thailand is the worst performing index in ASEAN, so we are the extremes here. But Thailand is really interesting because, 7 months into their fiscal year, the government has only spent 25% of the budget. Yeah, so they're way behind because of all the political issues. 75% to be spent in the next 5 months. That's going to be a huge stimulus for the market. So stocks we like there are leveraged into this spending, like Siam City Cement, TIPCO, the banks. And also we continue to have quite a positive view on tourism there. So AOT is our pick in that space.
Got it. So let's focus a little bit more on the middle of the road markets. So which markets are you more neutral on or underweight on, and any sort of standout stocks that you see in these markets?
Sure. I mean, just because we're neutral on the other 4 countries doesn't mean we have no stock ideas within them. There will always be subsectors which perform even within a neutral environment. So, take something like Singapore. We flag in this report that thematics like interest rates, higher for longer. Singapore banks remain very well positioned for that. One of the very few sectors across ASEAN that benefit from rates being higher for longer. So things like DBS would feature. But also maybe less recognized restructuring plays, especially in the telco sector, which I believe the Singapore team has written a lot about. StarHub, Singtel, those are stocks which we feel the value creation is happening through restructuring, and that'll be quite obvious on a 3-month basis to re-rate those stocks. Some other countries, Indonesia, neutral. I mean, we're still waiting for policy post the presidential elections. And the rupiah has been kind of weak, so that's dampening sentiment a bit. If we wanted to play that country, we'd be looking at commodities. We're seeing some good traction on ASPs for things like gold, nickel. So stocks like Vale or INCO, IJ, as well as United Tractors featured there. For the other 2 countries, the Philippines, we're very defensive. The macro data is very volatile. So consumer retail is probably where we want to be. Things like SM Prime, Jollibee, Bloomberry as well in the gaming space. And finally, Vietnam is a neutral because we're still coming out of a lot of political and regulatory volatility over the last couple of months. But we do feel the macro underpinnings are very strong. We're seeing earnings growth coming in on track for many sectors like steel, retail, tech. So our picks there like Mobile World, Hausen Group for steel, and FPT for tech, very much intact. We think those will do well in the next couple of months. And also market upgrade plays like we had Combank and Techcombank feature as well.
Got it. There's a lot of great alpha ideas in this report. So audience, please do download this report and have a look through it. Anand, thanks so much for joining us. Anand's our regional head of research.
Thank you.
Actually, there's an audience question here on what are some of the dividend plays that are outside REITs and banks. And I thought that was an interesting point to kind of bring in from James Teo here, the question. James, I think if you look at Singapore, obviously the banks and the REITs have some of the highest yields, but I think as Anand also mentioned earlier, that Singapore telcos is something to look out for. The Singtels and the StarHubs of the world, both of them have very strong opportunities to pay out a lot more, particularly StarHub. They're coming out of a restructuring process. So their operating costs will fall, their CapEx will fall, which means that they will have a lot more to pay out for. Singtel also has significant opportunities to restructure and also pay out more cash for shareholders. For both of them, we are looking at high 5 sort of dividend yields going into next year, with potential for more dividends being paid this year as well. So Singtel, StarHub, do have a look. Another stock to have a look is FRENCKEN. Now, Jarek is doubling down on his buy call, and his stock has 30% upside from his target price. The Singapore tech sector has had a very mixed first quarter, shall we say. But if for FRENCKEN, he sees that the semicon segment is actually doing well with gradual recovery going into 2024. There will be new product introductions for its customer in Europe as well as Asia. They've also relocated their US plant to a much larger facility, so there should be more volumes coming from there. And they've also expanded their motor business as well. Margins also should be picking up in the second half from better operating leverage as utilization levels rise in their facilities. So all of this should lead to better earnings momentum going into 2024 as well as FY 2025. So do have a look at that stock and where Jarek is calling for a buy. Now, finally, let's bring Jia Lin on the line. Jia Lin is reiterating her call on LHN. This is one of her high conviction Opportunity Plus stocks. Remember, Opportunity Plus stock are Maybank's high conviction small and mid cap ideas. So Jia Lin, LHN reported their first half numbers recently. What are the highlights?
Yeah, hi Dylan, thanks for having me. So LHN released its first half results last week, and its core profit came above our expectations. The main driver of this pleasant surprise in our view is the incremental growth of its co-living capacity, supported by stable occupancy levels across portfolio. We are seeing revenue growing by 13% half on half and 91% year on year from its Hollywood brand. And this is mainly due to the 3 new assets launched in the first half. Slight softness in the industrial and commercial leasing, which were completely offset by the growth from co-living. And notably, the growth from co-living business was able to cushion some of the impact from the sale of its logistics business in second half last year. Aside from the growing space optimization segment, we also see resilience in the other major segments. Facility management revenue grew by 14% year on year. Margin expanded by a little bit. Dividend of 1 cent in line with our forecast. So overall, we think it's a good set of results with slight surprise to the upside.
Got it. So what are some of the strongest growth drivers, do you think, for the stock going forward after when you look at this result?
Yeah, sure. So I think to understand the growth drivers, we want to bring your attention to another highlight, which is really like a shift in the company's earnings structure. So when we talk about ASEAN previously on the show, we often talk about, contract wins, new launches, strategy pivot, and new joint ventures. So the numbers this half really goes in line with the focus on co-living business. So space optimization is now contributing 66% of the total revenue. And, shortly 1 year ago, that figure is just 50% and 35% 2 years ago. So looking forward, we can expect the growth to continue. ASEAN has added 470 keys into the pipeline in the first half, with MOHH contracts and the former Bukit Timah Fire Station tender win. It has acquired GSM building and the former Wilmer Place to add to the pipeline in the second half. And we are expecting a strata sale of an industrial building to add to the cash flow. So yeah, so I think these are the overall drivers that will come up in the second half and also next year. Yeah.
Got it, Jolene. So a lot to look forward to. Thanks for joining us.
Yeah, thank you.
Let's we are running short of time, so let's move to the technicals from Nick, the chart guy. Nick can't join us today, but he's picked out two stock ideas. The first is KEPPEL DC REIT, where he's calling for an accumulate at this sort of levels, and the second name is NANOFILM Technologies. Again, this has been a stock that has had a rough time in the past, but he thinks now, from a technical point of view, things are ready to turn around. So do look at his report in our newsletter. Let's go to events. We've got quite a few events coming up, a lot of macro numbers, economic numbers coming out. One of the big ones is INTL, which will be out on the 23rd of May. I think, as we mentioned as well, one of the key dividend highlight stocks that we are discussing now. So do watch out for our result commentary on the 23rd of May. We also have inflation and GDP coming out on the 23rd and 24th. And retail sales coming out on the 5th of June. In terms of events, we got Hong Kong market insights, very, very timely after what Erica talked about today. Do sign up for that. You can use the QR code on your screen right now. That's also on the 23rd of May. We also have the Thai Telco Day, which is on the 28th. Do speak to your salesperson on that. With that, we are unfortunately out of time again. Thank you so much, as always, for joining us on Mondays. Thank you so much for your support. Please do, promote our show to your clients, friends, family. The bigger audience we have, the easier it is for us to bring more and more ideas. So thank you for joining us and have a profitable trading week.